Yo, what is up everybody? Welcome back to Krabs Trades. Today we got a different type of video for you guys, some educational content. We're going to be breaking down how to trade at all-time highs, how I trade at all-time highs profitably. So this is a question I've been asked so many times. Since we are actually trading near all-time highs right now in the live market, I might as well make this video now to make sure that all of you guys are prepared. And yeah, we're going to be breaking down pretty much my model, how I trade all-time highs profitably, as well as we're going to be going over my A+ setup in all-time highs price action. Make sure to watch until the end because I'm going to be dropping some gems in between in the middle of the video, so make sure to make it all the way till the end. And if you're new here, hit that subscribe button, hit the like before we get into this video. And yeah, all of that aside, let's get into it. Also in this video, we're going to be breaking down a lot of the mistakes that beginner traders make near all-time highs, as well as just mistakes in general that a lot of traders are making when they're trading all-time highs price action that they don't know that they're making. So make sure to watch this video all the way until the end so that you guys don't miss out on anything for yourself. But yeah, all that aside, let's get into the video. Alright, so some of the key things to keep in mind when you're trading at all-time highs is my bias personally when I'm trading at all-time highs is to remain bullish until we keep making new all-time highs. What this is going to do, it's going to align us with the higher time frame narrative. So unless we get a shift in structure on like the 4-hour time frame or the hourly time frame, then I won't really be looking for shorts at all. And this is a big mistake that I see a lot of beginner traders make, is they try to short all-time highs. And this is something that's going to lower their probabilities here instead of increasing their probabilities. Me personally, I don't short all-time highs until we start to get a shift in structure on the 4-hour time frame or the hourly time frame to the downside. So if we start to get like a CISD to the downside on the higher time frames, or a market structure shift on the 4-hour or the hourly time frame, then maybe I'll look for shorts. But my probabilities through years and years of backtesting and live market experience is taking longs near all-time highs is how I found my edge while trading all-time highs. Also, something that I do is I wait for pullbacks into structure imbalances. We're going to be talking about the exact imbalances that I use in my trading. And waiting for SMTs is very good to increase the win rate, as well as just avoiding shorts. So yeah, that I went over. So yeah, I'm going to show you guys how to implement all of this into the charts right now and how to form a good setup near all-time highs. Alright, so this is really trading at all-time highs simplified, and let's talk about exactly what I see here, right? So first of all, we had a new all-time highs here, right? And then we ran higher, made new all-time highs again. So what am I looking for here, right? I'm not looking to take this short. I'll let the short play out. I don't care about shorts when we're super bullish, and I'll just align myself with the trend, you know, like we talked about before. We don't really want to be taking shorts. We want to be actually avoiding shorts, right? So what are we going to do? We're going to wait for a pullback. Into what? Into structure or an imbalance. So let's actually take a look at the setup and what is an imbalance and what is structure. So first of all, you can have a pullback into a bullish breaker block right here, for example. And the breaker block is actually just this low, high, lower low, took out liquidity, run higher, pull back right back into the structure, right? You can see the reaction out that we had. And this isn't just like BS, by the way. We're going to look at a market example as well in a second. But yeah, right now I'm just trying to show you guys everything simplified in the most simple way possible. So right here, for example, this is an example of a pullback, right? I'm not trying to catch this short down. What I'm trying to catch is this long back up towards all-time highs, because when we're trading near all-time highs, the draw on liquidity for me is pretty simple. You know, I'm just expecting that we're going to keep making a new all-time highs pretty much until we start to shift structure to the downside. Then maybe I'll look for a short, but until the higher time frame tells me that we actually want to reverse, I won't be looking for shorts. You know, if everything on the 15-minute, the hourly, the 4-hour time frame is still closing to the upside, if we're still showing bullish momentum, then I have no reason to look for shorts for the way that I trade. And if price action isn't giving me any higher time frame narrative for a short, then I don't want to be shorting on the lower time frames, you know, on the 1 minute, like whatever your entry model time frame is. I always want that time frame to be aligned with the higher time frame narrative. So what I said here before was a pullback into structure or an imbalance. So you may ask, what is an imbalance, right? An imbalance is, in the most simple terms, if you're trading ICT, it is a unfilled fair value gap, right? And fair value gaps on the 5-minute or the 15-minute time frame are very significant. If you guys look at this, if you backtest it as well, when we pull back into unfilled 15 or 5-minute fair value gaps and rebalance it, we often have beautiful reactions out. We're actually going to take a look at this in the live market as well in a second, but I just want to show you guys the overall structure that we're kind of looking for right now, and that is a pullback into structure right here, as well as a fair value gap rebalance. So in this big ass move, right, there's probably going to be left behind either a 5-minute fair value gap that's unfilled, and by unfilled I mean price has never mitigated it, price has never tapped into it, and I'm basically looking for that to get rebalanced, right? So sometimes in a big move like this, there would be like an unfilled 5-minute or something. We could react off that. But for me to take an A++ setup, there will be like an unfilled 15-minute, a little bit lower, you know, that we're going to run lower, rebalance, which oftentimes also aligns with some structure, right? Always look to the left and see if there's structure. So when I do get some structure tapped, it can also be equilibrium if we pull our fib here as well. See how I'm kind of just stacking levels here, and I'm just looking at multiple things that are stacked here that we could have a reaction, right? And then after this, after we have some levels that we hit, we have equilibrium, a bullish breaker block here, a unfilled fair value gap that got rebalanced, boom, reaction, right? And then we're basically going to wait for a SMT and then take long. So let's look at a more detailed entry model right now. All right, so here is basically the A+ setup breakdown. Let's take a look at this. So you guys remember what we said here. This is the super simplified version. Now let's talk about this in a bit more detail. So right here we have all-time highs, right? Same structure, pulled back. This pullback, we don't want to catch the short. I don't care to short if I'm bullish towards all-time highs, right? Higher time frame, we're super bullish, so I'll just be looking for the pullback, right, to then continue longs. So right here we tapped into our key levels here. We had a bullish breaker block. We had equilibrium of the range, the 0.5 retracement here on the fib. I placed my fib from the low to the high. You can place it to all-time highs like that. You can see we pulled back, and you see how there's just like a ton of zones here stacked up, right? And that's what I'm pretty much looking for to then take price back up towards all-time highs. The way that I trade, it's a lot of rejections, and when I see multiple things aligned in my trading, that's when I can enter for my setup. So after we get those rejections, right, you see we had the reaction, then I'll wait for a SMT. Sometimes this can also look like this. Price won't always go super high. Sometimes, you know, price will just be a bit lower. But yeah, this is just one example. And this is my ABS framework as well. So in the way that I trade, I require a mandatory SMT. This is just going to increase probabilities a lot. And having some type of liquidity sweep is always good at the lows, especially when near all-time highs. You know, price always wants to take out liquidity. So me personally, I like SMTs a lot. So that's what I'll take my entry off of, right? And after SMT's in, then I'll wait for some final confirmation to then take my setup towards all-time highs again. And this can be a inversion or a kebab. If you guys don't know what kebabs are, we'll go over them in a second. It is a concept that I developed, and yeah, we'll go over that in a second in the live market. I'll basically break that down, but what it is, it's basically just a shift in structure pretty much, and I'll break it down in a second. But then we're expecting the ABS, the anticipatory breaker block strategy. We're basically predicting that price will create a bullish breaker block to then support price to our TP. So this is my strategy that I trade. Basically low, high, lower low, SMTs in, right? So now we're expecting a breaker block to support us towards our drawn liquidity. And with the ABS model, we're getting our entry before the breaker block is actually formed. And that's the main edge in my model. It's getting in before that breaker block so that it can then support price up towards our take profit here at our drawn liquidity, which if we're trading at all-time highs, then the draw was all-time highs, right? And also you can add time into it. I always wait till 10 a.m. or 2 p.m. or 6 p.m. I like to use the 4-hour power 3. So say for example this as well was 10 a.m. 10 a.m. open, low, high, close. It's even better if you have some time-based manipulation, or whatever, 10:30 a.m. 30-minute power 3, can even be 15-minute power 3, but just having time aligned with the setup is very, very good. Having price trade lower at that power 3 time, which can be, it can be 15-minute power 3, 30-minute power 3, hourly power 3, whatever you want, but just having time aligned with the setup is a very, very good confluence as well, and it's something I do use in my trading a lot. Me personally, I'm always looking at which direction time actually opens up into, which we'll review in 1 second with this setup here. But yeah, this is just the overall A+ ABS model back up towards all-time highs, and it is pretty much just a continuation. We were rejecting a breaker in this scenario. We were rejecting equilibrium right here, breaker block, SMT was put in. Also fair value gap rebalance on the 15-minute or 5-minute, rebalance of a unfilled fair value gap in this leg here. And when trading at all-time highs, I'm pretty much just expecting that we're going to keep making new all-time highs here. So very, very simple. Basically just looking for a pullback, right, into structure, into my key levels here. Had a few key levels here. Equilibrium, the bullish breaker block, unfilled gap rebalance. Very simple here. Wait for SMT. After you get SMT, or I don't know how you guys trade. If you have liquidity sweep, you could take it off that. For me personally, the way that I trade, I require a SMT for all my setups. It's just the highest win rate for me is always requiring an SMT for my style of trading. But yeah, then having that inverse to enter off of, and then you can take price back up towards all-time highs pretty much. But yeah, let's actually take a look at this exact model playing out in the live market, so you guys know that I'm not just capping, and this actually does happen like every time we're at all-time highs pretty much, unless we start to shift structure to the downside, which then you have to flip bias if the 4-hour or the hourly time frames begin to shift structure to the downside. That's when you can then flip your bias. And yeah, the main thing when trading near all-time highs, I try to avoid shorts near all-time highs. And yeah, let's take a look right now at a live market example of this playing out. Alright, so first thing, let's do a quick recap of what a kebab is. It's very simple, and we just came up with the name recently because this was a concept. I used to call them order blocks, but it's technically not an order block the way that I use it. A kebab is just a 3 candlestick pattern, and price often rejects it. You can see right here, up close candle, down close candle. This is the kebab right here, and then up close candle. That's all that it is. It's just a 3 candlestick pattern, and this middle candle here sandwiched in between is a very powerful level, and I've been using this for a while, and you can just see how price reacts off of it. If you guys backtest this, it happens literally so much. We can take a look at it again right here. Here's a kebab right there. Let's take a look at a few just so that you guys got them down. And you can see how it basically top ticked there, right? All that it was is just a 3 candlestick pattern. Down close candle, up close candle. This is the kebab, down close candle. It's just a opposite candle in between the same candles. That's all it is. Very, very simple. You see that reaction out that we got. So yeah, let's take a look at like 1 or 2 more just so that you guys have it, because I don't want you guys to be confused by what a kebab is here that we'll look at in just a second. So let's look at another kebab. Let's see right here. Here's another one. This one's technically a order block as well, but all that it is just that opposite candle in between the same color candles. Very, very simple. Just like that. Let's take a look at like one more. Right here, it literally happens so much. It's such a powerful level. Right here, and it pretty much, I use it as a PD ray pretty much. Right here, down close candle, same color candles, held, held. So it's basically just a PD array. And yes, this example is basically like an order block too, but the thing is, with the way that I use it, it's not a order block. Let's see another example here. Right here, there's another one. It literally happens so much. Boom, just up close candle, down close candle, that's the kebab. Up close candle. See how price reacted off of it. You guys can backtest this for yourself as well, but this is just a concept that I use and I developed through a lot of backtesting. It's just something I've been seeing. But yeah, all that aside, let's get into it. I just wanted to break that down since I've never actually talked about it on this channel. But yeah, let's get back into it. So this is the setup here that I was looking at for a all-time highs type of trade. Now, this isn't actually all-time highs, yes, but just imagine that this is the all-time highs, because this is how it works at all-time highs. All right, so if we take a look actually at this is pretty much what we were looking at, right? We have all-time highs above. What we're going to wait for is a run lower into equilibrium of the range, or OTE, some type of structure. And if there is an unfilled 15 or 5-minute for value gap, that makes the setup even better, because when these get rebalanced, it's just such a beautiful reaction that we get off of it. My favorite setups in my trading usually have a 15-minute or 5-minute for value gap rebalance, and see, in this setup we didn't have it, but we do have everything else. So the first thing that we're going to look at is time. What time is it? It's 10 a.m. right now, so let's play price. All right, 10 a.m. right here. 10 a.m. opened up. And what did 10 a.m. do, right? Remember how we talked about time right here? Let's take a look right here. 10 a.m. open, low, high, close. So we can just write 10 a.m. open, low, high, close, for example. And let's see what 10 a.m. did. Did 10 a.m. open up lower into a SMT? Yes, 10 a.m. opened up lower into a SMT with ES, meaning ES swept out this low, NQ did not, right? So that forms a SMT right here, and I don't think you guys can see ES on my screen right now, but ES did take out this low here at the low. So NQ did not. This is now a bullish SMT right there at the low. So since we're trading at all-time highs, remember what we talked about, we're just expecting price to pretty much make a new all-time highs, right? So let's take a look here. All right, all-time highs, expecting a new all-time highs to be formed, and this is pretty much the entry. Price ran lower. We had a pullback into actually OTE of the range right here. You can see we rejected OTE perfectly. And the way that I placed my fib was from this swing low to this swing high if I'm bullish. Also, you can use this higher time frame range as well, from the low to the high over here on the left. And you can see here that we're holding the OTE, right? The optimal trade entry, which is the 705 retracement of the fib. If you want to screenshot my fib settings, there you go. But yeah, you can see how we pulled back into the OTE, instant reaction, right? We never closed below the OTE of the range here. We never closed below it. All that we're seeing is strong wicks out, right? So that's something that helps me a lot with bias as well. I always look at wicks. What are we rejecting and what are we respecting, right? I always want to see if we're respecting bullish PD arrays or disrespecting bullish PD arrays when trading at all-time highs. Also here we had a kebab on the 1 minute. Remember what we talked about before? Just this up close candle, down close candle. Here's the kebab, up close candle. Just opposite candle in between the same color candles. It's a very simple concept, but it's very powerful because it helps me with bias. It helps me with seeing what we reject, what we respect, and then later I'll use it as an entry trigger as well. So after we get the SMT in, I'm bullish. All-time highs is what I'm expecting to be my drawn liquidity since we are at all-time highs. We had 10 a.m. open up lower, right? Right here, 10 a.m. opened into a SMT. Beautiful. So now my final confirmation, we have our bias, bullish, opened up lower, SMT, times aligned. Final confirmation, I'm waiting for either a IFEG or an iKebab right here. And iKebab just stands for inverse kebab. It's just when we close above the kebab right there. Just a shift in structure pretty much. So the way that I see these is I see them as like a structure point, right? And when we actually close above them, I'm expecting price to then keep running higher. And the thing is, when we also respect kebabs, you can see how we reject it out, right? So yeah, this is overall a very clean setup. I would say this is A+. So let's see how it plays out. For the sake of this video, don't get me wrong, I already know how it plays out. It's a winning trade, but this is just a example here. I'm not going to cap to you guys. This was a A+ setup. So yeah, we'll break even at this internal high. And yeah, let's take a look. All right, break even there at the most obvious internal high there. And let's see if the new all-time highs can get formed. Beautiful, just like that. And that's basically exactly what we talked about here in our chart examples. So make sure to comment below if you guys have any questions. But this is pretty much how I handle trading all-time highs. I look for very simple setups just like this. Just pullbacks into unfilled fair value gaps on the 5 or 15 minute time frame. And you know what? Let's actually take a look at the unfilled fair value gaps. So yes, by the way, this wasn't actually all-time highs here. I was too lazy to find a real setup near all-time highs, if I'm being real with you guys. But this is the exact same thing that always happens near all-time highs, is something just like this. So just imagine, for the sake of this setup, that this was all-time highs, but you guys already know. I'm gonna keep it real with you guys. I was too lazy to find a real setup. But yeah, same exact thing happens near all-time highs. If you want, you can backtest it for yourself and look for it for the live market. Yeah, I can't even speak. Look for it in the live market on your own this week, because this week we're going to be most likely trading near all-time highs as well. But let's take a look at what an unfilled fair value gap is, right? Like, you may be wondering, some of you, if you're new here, what is a unfilled fair value gap? So right here, for example, we have a unfilled 15-minute fair value gap. When price taps into this unfilled fair value gap, we expect a reaction, if it goes with our bias, of course. And here's the fair value gap. And by unfilled, all that I mean is that price never wicked into it, right? Price has never wicked into this right here. And when it does wick into it, we often have a reaction, because this is a imbalance in price. And most importantly, after price takes out liquidity, price then rebalances imbalances. So just like that, for example, let's see if we can actually see a better setup here. 1 second. Here we go. Here's a nice example. So when we rebalance a unfilled fair value gap, and if it goes with your bias, this is how I mark it up, by the way. If you guys ever see my charts and you see like plus M15R or minus M15R, that's what it is. It's just a unfilled fair value gap that got rebalanced. And you can see when price rebalances that inefficiency, right? For the first time it rebalances, let's actually replay this. Hold up. Oh wait, never mind. It's low-key cooked. I didn't set this to replay. All right. So we'll take a look here though. You guys see the first time that price rebalanced this unfilled 15-minute fair value gap? See the instant reaction out that we had, right? So that's something that I look for a lot in my trading, is I look at these unfilled fair value gaps, right? And I can take trades based off them. So say price traded into here, and then on the 1 minute time frame, right now we're on the 15, but then on the lower time frames, if we get an SMT and say it goes with my bias, then I can take setups out of it. Obviously not if we're trading at all-time highs. I wouldn't take a short here. Also, we can review this real quick, this example of why I don't like shorting near all-time highs. Say that we have all-time highs right here. This is an example of why I don't like to short near all-time highs. Say that we get a short setup, right? SMT, whatever. Right here. This isn't actually the all-time highs. Like I said before, I was too lazy to find actual setups in this video, low-key. But say we're trying to take a short here, right? 15-minute rebalance. Say we had SMT on the lower time frames, looking for a short. What can happen when you're trading at all-time highs is, like we talked about before, right here. Price can, did I write it down? Oh yeah, bias stays bullish. So I just wouldn't be bullish if all-time highs was here, because price can often look to make new all-time highs. And you can see something like this happen where you try and take a short, right? Or this wouldn't happen. This would happen. You can try and take a short. Say you get a short setup, but the draw is bullish, because we have all-time highs above. Price can instantly stop you out and just form that new all-time highs, right? Because higher time frame, if you think about it right here, everything would still be bullish on the hourly, the 4 hour, just everything straight pumping. So you don't really want to fade that higher time frame narrative. And I would say it's a bit risky to do that. But yeah, what I pretty much look for is pullbacks into SMTs having time aligned, as well as looking at rejections of multiple key levels. So here, for example, we had a kebab rejection, we had OTE of the range, we had that time-based manipulation open lower. A big thing in my trading is the SMTs as well. Then we had the shift in structure here, the kebab, or you can also use the IFVG. I know a lot of you guys love the IFVGs. You can take it after we close above, or you can even take a CISD. That's the thing with my model. You can enter based on a few different criteria. Like say you want to take it off of CISD, you can do that as well. But yeah, I like the kebab because the entry is a bit more precise. If you waited on that CISD, you can see how much higher your entry would be, right? Only giving like a 1-to-1 risk to reward, while with the kebab here gives 1-to-2. Nice. But yeah, that's pretty much it for this video. If you guys actually made it all the way till the end, comment the word kebab if you guys made it all the way till the end. Also comment if you guys have any questions. And yeah, I think we covered a lot. And also, if you guys are interested in working with me one-on-one, I actually guarantee to work with you guys one-on-one until you're funded over 6 figures with prop firms, and until you start to receive your first ever prop firm payouts. I just opened up my wait list after it being closed for a while. I was pretty much waiting until I got some student results from that first batch of early access students that I had, and some of my students right now actually secured some of their first ever results after working with me. In literally under 60 days they started to get results. Let's take a look here. I sent this out in my Discord before, but yeah, one of my students, Abba, right here, went from knowing nothing about trading, and then within 2 months he secured his first ever prop firm payout and max allocation with Top Step. If we take a look right here, max allocation, and then he secured his first ever prop firm payout after 2 months of working with me. And yeah, this is the first of many more to come. Now I know he has some alpha futures accounts as well, and max allocation with Top Step, as well as my boy Farhad. He's been trading deadass for a few years, and he's been struggling with consistency in trading. And now after working with me, after literally a month, we worked together with Farhad. We hopped on some one-on-one calls. I brought out the weak points out of his trading, and he just secured his first ever prop firm payout as well. And he also hit his 3K profit week on his funded account. So here is that right here. And here is him executing a nice ABS model setup on an Express account as well on Top Step. But yeah, if you guys are interested, the waitlist is now open. The mentorship launches in about 4 days. So make sure to join that up if you're not yet signed up. You might as well apply, see if you qualify. If you do qualify to work with me, then we'll get started. We'll make sure to get you some results, and like I said, it is guaranteed that I'll work with you until you get results. But yeah, that is the first link in the description. But yeah, all that aside, thank you guys for watching. Until next time, I'm gonna catch you guys. Peace out.